please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Steady day of gains so far, 10,275 on the Nifty, which means we're practically at yesterday's high level of 10,279. So we've recouped all the losses that we made in yesterday's trade. The Bank Nifty is also looking good with a gain of about 1.5%. Ashwani Gujral now joins in. Ashwani, trading above the 200-day moving average in the Nifty, back again at yesterday's high level. How are you approaching trade now?
See, I think the market opened with a significant gap and since then has been consolidating. I would think that the second half of the move or the move in the second half is likely to now start. So that way, I think buying into the Nifty, Bank Nifty is a good idea. And possibly going into the policy, the market should rally further because I don't think great amounts of shorts have been covered, particularly banks which had a lot of hammering yesterday. So market looks good and 10,300 resistance has not been able to create great amounts of selling or pushback on the market. Having said that, I think PSU banks is where people should have some long positions. Odds are they are so beaten up that if they get something, they should move higher and sharply higher. So that way, BoB is a buy with a stop of 140, target of 151. BoI is a buy with a stop of 104, target of 116. Tata Motors is a buy with a stop of 365, target of 390.
Okay, all right. Ashwani, bracing ourselves for a better second half of trade. Rajat, coming across to you. What are the picks you have for us?
I have two picks from the futures segment. One of them is an FMCG company, ITC. ITC April futures stop below 256. 263.50 and 267 are the two targets, and the duration for the trade is a couple of trading sessions, that is up until tomorrow. And Motherson Sumi April futures, Motherson Sumi could not sustain above 343 and started coming down. If you look at the daily chart on the last 3 days, including today, it is actually facing selling pressure at higher levels. So put a stop loss at 344.50, 335 and 332 would be the two targets. Again, the duration for this April futures trade on Motherson Sumi would be 2 days, that is up until Friday.
Ashwani, would you back the tire stocks from these levels? MRF and Apollo are already trading at record levels.
That's for me?
Yes.
See, they've just started coming out of a correction. And as long as rubber prices keep coming off, I think my choice here is more on MRF and Balkrishna Industries. I think Apollo is number 4 and the number 3 is probably CEAT. So in that order, Balkrishna, MRF, CEAT and Apollo. But definitely the tire space looks like it's headed higher.
Okay, all right. Thanks so much for that, Rajat, as well as Ashwani. Well, moving on then, on to an update coming in on Reliance Communications assets sale. The Supreme Court has refused to lift the stay on the sale of assets that was imposed by NCLT. Ashwani Kumar joins us with further details.
Bit of a layered order, so I'll take you through the nuances here. There were 2 stay orders on the sale of assets of RCOM, one by Bombay High Court, the other one by NCLT. Now, what's important is that the NCLT order had been passed at the behest of a shareholder called HSBC, Daisy. For that matter, what the Apex Court has done is that it has refused to lift that stay passed by the NCLT and has directed the parties, in this case RCOM, to proceed before the appellate tribunal, which happens to be NCLAT. So the next port of call as far as RCOM is concerned will be the NCLAT. Let's also keep in mind the second stay order. The second stay order on the sale of assets had been issued by the Bombay High Court, and this stay order was in response to an Ericsson's application for arbitration. Ericsson is claiming an award of about 1,100 crore rupees. Now, in that order, what the Apex Court has done is that it has vacated the stay order and it has allowed RCOM to proceed in accordance with law. That's a very important caveat here. So as of right now, the sale process, it appears, does appear to be in a bit of a stumbling block. There does appear to be that stumbling block in the form of NCLAT. What's important to distinguish, however, is that the NCLAT stay order had been granted only with respect to tower assets. Meanwhile, the Bombay High Court stay order was with respect to the fiber, the spectrum, as well as the real estate assets. So while in principle, RCOM might be at liberty to proceed with the sale of fiber, spectrum and real estate assets, keep in mind that this entire transaction between RCOM and Reliance Jio was a block transaction for the entire set of assets, and the tower assets will be cleared only and only by the NCLAT now. Back to you.
Okay, Ashmed, and what about the court proceedings in the Binani Cement, Binani Industry, Dalmia case? It's a setback for Dalmia Bharat, you would say.
Indeed, expectedly, Dalmia Bharat had taken recourse to legal remedies given the fact that NCLAT, in an unprecedented order, had allowed for an out-of-court settlement between Binani as well as the lenders. Now, the course of action that Dalmia has taken is that they've moved the NCLAT, where they expressed concern that this was in violation of the IBC, that there were bids made under the IBC process, and that should be respected, that an alternate mechanism by way of an out-of-court settlement should not be provided for. Nonetheless, what the NCLAT has done as of right now is that it has not seen it fit to grant any stay as far as the out-of-court settlement process is concerned. So as far as that is concerned, there are absolutely no stumbling blocks. Settlement, the out-of-court talks can continue between the lenders as well as Binani. However, the NCLAT has issued a notice to Binani on this application by Dalmia, and this application will be heard again later this month. Back to you.
Okay, all right. Thanks so much, Ashmit, for joining in and giving us details on both those two cases. Well, let's take a quick check on the European markets. Remember, in yesterday's trading session, the CAC and the DAX, they ended in the red. The FTSE managed to claw back, but those markets, they recovered considerably, and this morning for them, they have opened up very, very well. The full of stocks in the cement pack, you have Aramco Cements, that spiked up. In fact, it's higher by close to around 5% as we speak. India Cements as well is moving higher. It's sitting with a gain of around 3.5%. Remember, for some of the South-based companies, particularly India Cements, the offtake wasn't great at all in the last 3 months, but that's likely to improve going ahead. Sand availability was an issue out there. There's been a reported price increase as well. We can't really confirm that, but in this month normally we do see a price increase. That's in the month of April. We have seen in the past as well, and that could explain why both these two stocks are moving well. But let's shift focus then to the power sector. The monthly market clearing price at Indian Exchange, Energy Exchange that is, has spiked up by around 25% in the month of March. We spoke today to the managements of IEX, Jindal Power, JSW Energy, PTC. Now, Anisha Jain joins us with all the key takeaways from the discussion we had earlier today. Anisha.
Thank you, Nigel, for that. Well, yes, we talked to all these management to understand whether this rate hike is sustainable or not, and what are the reasons that are leading to this hike in the spot prices. Is it that the demand is going higher, or there are some constraints on the supply side? Now, what we understood is actually that the demand is growing. In fact, in Q4, it was up around 7.5% versus the 3-4% mark that we had seen earlier in last year. But it is actually the coal shortage that is really causing that the prices to go higher, because the coal supply has not increase in tandem or in sync with what the demand has increased by. Now, as per the management, around 10 to 12,000 worth of megawatt of assets are lying stranded or not working as per the optimum utilization levels because there is a shortage of supply. They are talking about that the prices are expected to sustain at a higher level this summer, given the coal infrastructure or rake availability is not expected to improve anytime soon, as well as the production from Coal India is not expected to ramp up very significantly as far as the next 2 to 3 months is concerned. Now, we had a word with PTC India as well that said that apart from shortage of coal, there are other reasons as well that are leading to this spike in demand as well as prices. For example, there are a lot of elections coming up in this year. There is Saubhagya scheme that is expected to add more households to the electricity net, as well as the harsh summer is what is leading to this the supply demand glitch. Also, the nuclear energy power plants and hydro energy power plants have not worked as per the plan, and that's the reason we are seeing that dip. We also talked to the management of JSW as well as JSPL on the terminal deed update. Now, JSW Energy did say that the long stop date is June 2018, and they are working towards it. But we listen into the management of what they had to say regarding whether this demand increase is sustainable or not, and whether this price hike is sustainable or not.
The price increase was because of less supply of power, and we had less of hydro generation also in these months, and in fact nuclear generation also went down. So there was more pressure on the thermal generation, and coal supply side also there are few issues. Demand is growing almost at a rate of 6 to 7%, And if coal supply don't increase at this rate, definitely the prices will increase. And looking at what price discovery has happened on the deep platform for the next 4-5 months duration contracts, the prices are in the range of 4.5 rupees to 5 rupees.
This year is going to be an election year in many of the large states who are the consumer states. Secondly, how the monsoon is going to behave. Just today only, early morning, we got a forecast. SkyMet has come out with a forecast of a normal monsoon. But then but they have also stated that in peninsular India as well as Northeast, there is going to be a deficit. The IMD is also going to come out with the forecast. So all those factors will play an important role.
You have got at least 10 to 12, 15,000 megawatts of generation capacity in the private sector only, which is backed down due to non-availability of coal. So there are constraints both on the production side, because the Coal India failed to meet its target this year by about 5%, as well as on the evacuation and infrastructure side. I really don't see this correcting itself in the near future, because infrastructure is something which the government can't create overnight. And similarly is the case with coal production. Coal India cannot ramp up its production overnight. They'll take them some time to ramp up the production. So I see these prices sustaining during these summers at least, when the demand is high.
During this year, the power demand has grown by 6% till date, and it has been growing quarter on quarter. Last year, this growth was 2.5%. And in the current quarter, quarter 4, the growth is in excess of 7.5%. Effectively, coal supply has to go up by 11-12%, whereas the coal supply has gone up by only 6.3% during the current financial year. So that's what is creating a catch-22 situation, that the oversupply of power generator is there in the system, but there is no enough coal which can meet this kind of a power demand.
In fact, staying with JSW Energy, the management also told us that they're working on the Tamnar power plant's stake sale.
There are the condition precedents which are supposed to be completed by 30th of June, and JSPL is trying to work out on those condition precedents.
Well, just to tell our viewers, what's this Tamnar plant sale? For JSPL and JSW Energy, around 2 years ago, they got into that agreement where JSW Energy will be buying this particular unit from JSPL. The total capacity is around 1,000 megawatt, and in fact, importantly, it's not running at optimum capacity utilization levels. What was the deal amount? Well, there was some money that was paid upfront, and the total enterprise value then will be around 4,000 crores. But if there are certain conditions that get fulfilled, that's like a PPA getting signed and power coal security as well, then in fact the enterprise value can go to around 6,500 crores. So that in fact is a replacement cost. 1,000 megawatt at around 6.5 crores, that comes to around 6,500 crores. You'll say for JSPL, what does this mean? Well, it's two ways of looking at it. One is that if they can achieve all those PPAs, assure coal security, then they'll get close to around 6,500 crores, which will be pretty good news for them in terms of the deleveraging. If they don't, then they're still left with a good asset, and if they don't reach it, then in fact that 4,000 crores as well is what they're likely to get, which is lower than the replacement cost. So just keep an eye on that front. June 2018, I'll tell you what, most of the street dream I've spoken to, they don't expect this deal to go through, though both the managements are saying let's wait till June 2018, but the street has already discounted that this deal is not going to happen. Why? Because you can't assure coal security, one. Part number two, you can't assure full PPAs to JSW Energy as well. So that's why, in fact, the street is not working with that. And JSW Energy in the past has said, we don't think this is going to go through as well.
Okay. Trading gains ahead of the policy in less than 2 hours, but let's find the way ahead for the equity market. Earlier today, we spoke with Ratnesh Kumar, the MD and CEO of BoB Caps, to get his sense on the sectors he's betting on. Listen in.
IT is looking like a place which is kind of more steady in the overall volatile market, and it is attracting attention. But for a long-term portfolio, I think I would rather still be focused more aggressively on the domestic sectors, because that is where the growth revival has much further to go. We are very early stages in the cycle. So naturally, IT is steady. But I think if you're looking at 15-20% plus kind of a growth, then one will have to look at domestic sectors. entire consumption space is going to be a good long-term play. It is a structural story, and naturally the dislocations from demonetization, etc., and GST, they are now behind. So any and every consumption play, to the extent one can find value in individual stocks, I think those are going to be strong sort of preferred segments to be in. Consumption play where one can find value, that is certainly going to remain a play. More so as you having additional emphasis on the rural side, that will also help.
Okay, then we'll slip in a short break. You come back, we'll get straight to our commodity corner.
Chat commodities now, where we have seen the pressure continue more or less for many of those industrial metals. Remember, we started Shanghai on a weaker note when it comes to steel and the iron ore prices, and that pretty much has had its impact on the non-ferrous metals as well. Yesterday, New York session was good. We did see some buying, especially for nickel and copper, but that hasn't been able to hold on right now, and there is a bit of a pressure there. In any case, all of these metals are actually off the kind of highs we started January 2018 with. Earlier it was the interest rates, and now it has been the global trade war. And then, of course, if that continues to go on, then the manufacturing and growth might take a hit globally. That is what is worrying many of these markets. Nickel prices slightly back up on your screens, but we haven't seen much of gains really come in for the rest of them. Tapan Patel from LKP Securities now joins us to talk about strategies here. Tapan, hi. It doesn't really seem to be taking a direction. It has been volatile at best when it comes to the metals as the prices. All trading zones seem to be picking up a different way. Shanghai was weaker. Europe perhaps is looking to buy at these levels in case of metals. How are you trading these?
Hi, Manisha. Good afternoon. Yes, I think the metals are trading in a completely range, and we have to play in that range only. Especially copper is giving a good range of 10 rupees from 430 to 440. So prices earlier were trading lower because of the China trade war and low demand. And we have seen good rise from yesterday's evening session with pickup in the equity market. So we can expect some bounce back towards 440, 441 in copper prices, and that can be a good trading range for the day. So buying around 433 to 434 is a good trading range to go along with the target of 440.
Also, how are you looking at the gold and silver prices? Because while yesterday was a safe haven, buying, of course, hasn't been able to sustain as we see the equities and the US dollar firm up again. But are you selling on the kind of gains that we saw yesterday, or the kind of declines that we have seen are a good buying opportunity?
Yes, I think the easing tensions between US and China and news of negotiation between the tariff plan is on. So that is pressuring the prices to trade lower, and we can expect 30,500 a good support in gold prices, and we can expect this pressure to continue with gain in equity prices. So we can expect prices to trade lower, and selling around 30,680 is advisable with the target of 30,500.
What is also your sense on the silver prices going forward? Because that has been under pressure. How are you looking at that? The markets, of course, have been talking about stronger demand coming in from solar panels and auto and smartphones, etc. And there is a deficit we are working with as well. All those fundamentals, do you see that moving in for prices?
Yes, I think the longer-term fundamentals are still bullish, and we can expect buying in silver over the longer term once this all tariff war and all the news settle down. So even if we see gold's ratio, it's nearly 80 mark since the last 1 month. So that is also a good trigger to go long in silver for the longer term. So, but if we see short-term picture, silver can remain under pressure with gold prices, and we can expect 37,900 is a good support in the silver also.
Okay, all right. Thanks so much for that, Manisha and Tapan, for joining in and giving us this commodity trading strategies. By the way, the markets have moved to the high point of the day, 10,280. The two-wheelers are doing well. Hero MotoCorp and Eicher Motors, both of them, they have spiked up to the high point of the day. So good going, 10,280 on the Nifty. This is yesterday's high. Let's see